Today, we're covering the top errors that business brokers make when putting together CIMs or business profiles for businesses that they're trying to sell.
I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Are you thinking of growing your business or beginning a journey into entrepreneurship? Take a shortcut to success by buying an existing and profitable business the right way. Visit businessbuyeradvantage.com and learn more about my online training, group coaching, and consulting services designed to help you win.
So I was having a conversation the other day with Jeff and Alberto, two other analysts that we have here on the team, and we were going through a CIM, and people were asking questions like, "Well, what about this? What about that? What about this?" And the document literally did not have most of the key bits of information that we need in order to help a buyer analyze a deal. And after the conversation, I was like, we see this all the time. Like, we'll get these really slick 50-page PDFs that are put together by business brokers, and we still end up asking 15 to 20 questions about the business before we can even determine what a reasonable offer might be. And so today I decided to do a video on the top omissions or errors that I see business brokers do when they put together business profiles or CIMs. And if you have seen one that I don't mention, please put it in the comments down below. I'd love to hear what your feedback is. So, first of all, what is a business profile or a CIM, which is a confidential information memorandum? I think most people summarize it as. It's a package of information that is put together so that a buyer can take that information and go and make an offer. And I remember back when I was first learning business brokerage, I was told that this CIM should be everything someone needs to make an offer, and it should be engaging enough and convincing enough that if there was an out-of-town buyer, that based upon reading the CIM, they should want to invest in a plane ticket to come and visit the business and meet the owner themselves. Okay. So that in my mind is the litmus test of what a good business profile should be. In my book, How to Sell My Own Business, there's a section in here on business profiles and what should be included in them. And if you want to see a business profile walkthrough, if you go over to howtosellmyownbusiness.com, which is basically our website for services that we do with business owners that want our help to sell. There's a video. You go halfway down. It says, what do we call it? We call it buyer readiness or the confidential business profile. There's a video there with a walkthrough of a business profile that we've created, and you can kind of see everything that's in there. But here are the top things that we most often see missing from these business profiles. So top mistake number one, no balance sheet or working capital information. And it's very common for us to see business profiles with no balance sheets at all, which is really tough to swallow, because if you have no idea what kind of operating capital is required to make a business go, and most small businesses are offered as asset sales, then you have no idea what you can pay for the business, because the income statement just shows you what the profitability was over the period, the year. But you don't know what kind of machine that the seller has built. Have they built a machine where everybody pays cash and you are able to pay your suppliers immediately, so cash just rolls through every day? Or have they built a machine based upon a clientele who all expect to pay in 90 days? And that machine, the second one, where everyone expects to pay in 90 days, is actually not just a business, it's also a bank, because you're literally financing the operations of your customers. So if a buyer doesn't understand that this is the clientele you've accumulated, that they are requiring or that they expect that you're going to finance their businesses for 90 days, then how on earth can someone determine the value of your business if you're not going to include that operating capital, right? Because in most asset deals, it's being offered with none of the operating capital. And so balance sheet information is absolutely critical. Um, Basically, a CIM without balance sheet information is like selling a car without saying how much gas is required to run it, or how much the tank will hold, or how much you need to have in the tank. I made a video a couple years ago called "Is the inventory added or included in the price of a business?" And it's great, even if it's just to see the low video quality and my chubby face at the time. You should go check it out. We'll put a link to it here somewhere. So, top mistake number two, no asset list or equipment valuation. So, um, it should be included in this sim. Like, you're going to buy this business. Okay, what do I get in the business? And then often there's nothing. Like, like, okay, if we pay you this money you're asking for, what do we get? And we know that we get the name, and we know we get the website address and all that kind of stuff. But like, what comes with the business? Like, is there a certain amount of inventory that comes with the business? Does the business own stuff? Is there a delivery truck? Is there a forklift? All this kind of thing. And it's very rare that we actually get complete asset lists of everything that comes with the transaction. And furthermore, it should not just be an asset list. There should be some kind of estimate of value. And I'm not talking about a certified appraisal or anything like that. It should just be delivery truck, 10-year-old delivery truck, estimated value 10 grand, whatever, just to give people a ballpark idea of what kind of collateral might exist if they intend to maybe do some kind of conventional financing and they want to discuss it with a bank. Not having any kind of estimate of value is just lazy. So, and I know what happens, because I used to be a business broker, and we still help people today sell businesses, and we do it with a consulting methodology, which is a little bit different. But when we deal with a seller, we ask for these things, and the seller's like, "Oh, do I really have to do it?" We're like, "Yeah, you really have to do it." And they go, "Well, I'm busy. It's going to take some time." We're like, "Great, take your time." Like, taking a business to market which is not properly prepared to be sold is just going to waste even more of your time and effort later on, because when you have a hot and ready buyer who wants to make an offer and asks for these things, and then you make them wait 3 weeks, you're going to derail your deal. It's better to invest the time up front and build a properly structured sim or business profile, just for the reason that it means that the diligence documentation for the business has been assembled by the seller in trying to answer the broker questions in order to properly populate the sim. Got it? Okay. So, um, the just the machinery, equipment, assets that come with the business, just answer the question: if I pay this money to buy this business, what do I get? Like that. It's as simple as that. Mistake number 3: poor or missing normalization adjustments. So oftentimes we'll see a sim, it'll just say like adjusted net income, or SDE, seller's discretionary earnings, without showing how they got there. They'll just say, this is the SDE of the business. And what's amazing is it's always like a round number. Like, you can tell there's some estimation in play that was been put into the number. Or when it's shown, what they'll do is they'll put the complete income statement, and then they'll put a list of add backs, but they don't illustrate where in the income statement the add backs belong. Why is this a problem? I'll tell you why. Because it tells me how the broker came up with the normalization. When we talk with sellers, they might say, "Oh, the business pays for my car, so the lease payment is should be added back as the SDE, part of the SDE, right?" So on the income statement, they might have an auto expense, and the auto expense line might be $5,000 of expense for a given year. And then we'll say, "Well, how much is your lease payment?" And they'll say 800 a month, which is 9,600 a year. You can start to see the problem here, right? So they're claiming that the business is paying for their car lease, and this is 9,600 a year, but the auto expense on the income statement is only 5 grand. And so then we can push back and say, this doesn't make sense. It doesn't make sense. You're saying that we need to add back a number that's too high. what we will often end up discovering is that what is happening is that the car lease payment is coming out of their business account. And so, in the mind of the business owner, they think the business is paying for their car lease, but their accountant knows that it's their personal car. So, the accountant is actually adjusting it off the year end statements and adding it to their T4 or their W-2, right? So, so, so the business seller thinks that the business is paying for the car, but in reality, he's paying for his own car. It's just the cash flow is coming out of the business bank account. When you don't line up the adjustments to the line items on the income statement, like for example, the broker who just adds them at the bottom, they'll just put 9,600 at the bottom. And now what we've done is we've effectively double counted because that money is actually in the net income of the business. And now we're adding it back again, which then doubles its size in the SDE calculation, which creates an erroneous SDE. And so I'm always very suspicious when I see a long column of expenses and at the bottom it says, here are the add backs. It's not the way you should be presenting it. And again, lazy. It's just brokers asking sellers, what other expenses in the business does it pay for that we should add back? And they explain that the add backs are important because you get a multiple of the SDE as a business value. And then the sellers dream up everything they can. They're going to talk about the vacation they took, the gas in the wife's car, like all kinds of stuff. And they're just going to plop it all down there and get the most inflated SDE number they can. They're going to multiply that and put the asking price. And then later in due diligence, people are going to discover all these mistakes and the deal will fall apart. And the seller's expectation is completely out of whack. So we don't like it when we see missing or lazy normalizations. Mistake number 4, no account of the owner's time and role. So we often have to ask the question, how many hours a week does the owner work in the business and what in fact are they doing? And this is important. Why? Well, I mentioned a term earlier, SDE, seller's discretionary earnings. The definition of SDE is the amount of money available to an owner operator that works full time in the business. And so if we don't know if the owner is actually working full time in the business, we can't have any opinion about whether the SDE is accurate or not. And in fact, we have seen quite often opportunities for buyers because the sellers misrepresent the SDE in the buyer's favor, right? Like the seller will be spending 3 hours a week supervising the business. They have a manager in place, but they will present the cash flow after that manager has been paid as though it were SDE when in fact it's not. It's normalized EBITDA, right? And so we only usually discover this after we've asked more questions. And again, it gets back to brokers not knowing what they're doing. So a good CIM should have a complete financial picture, not just revenue and SDE, but also what assets are included, how the numbers were derived, what kind of work is involved for the person that is selling so that the buyer can determine if they're going to step in and do that role as well, or maybe if they're going to hire a manager or something like that. We see this kind of thing all the time. And I think this is one of the biggest advantages that we deliver when we're approached by buyers who want our help. We have a consulting package called a buyer insight analysis. If you go to businessbuyeradvantage.com, down at the bottom of the screen, at the bottom of the page, it says consulting packages, buyer insight analysis. There's a video there that you can watch that kind of shows what we do. But the team and I, we look at usually 3 to 5 new CIMs every week. And we see the same things over and over and over again. And we can more quickly cut to the chase and ask the right questions to figure out if something makes sense or not. And so one of the greatest things we deliver to clients is just the speed at which we're able to cut through these things and uncovering the problems that are not necessarily evident, but we have seen them before. And so we know to go looking for them. And that's, this is what we do here is we work on these deals. And for business owners who want to sell on their own and, check out this book, How to Sell My Own Business. If you go over to howtosellmyownbusiness.com, there's a place where you can download this book. So that explains the process of how a business is sold. But as I was saying earlier, when we prepare a business profile for somebody to sell their business, we make sure it's complete. We ask for all the details so that the buyers don't get frustrated. We're selfishly trying to create less work for ourselves later on. We're trying to create less work for the seller to answer all these questions. But more importantly, by making the seller answer all of our questions up front, the seller is actually gathering the information together. And so they're prepared for due diligence. And so when the right buyer comes along and they're working on a deal, they can more readily answer the questions. Time is of the essence. If you have someone interested in buying a business and you delay and delay and delay and make them wait and wait and wait while you gather things together, et cetera, it's never good for deal making. You want to be ready to satisfy people's questions, to answer their questions, and to move forward. And with that, I'll say thank you very much. Thanks for tuning in, and we'll see you next time. Let me know down below in the comments if you've ever been frustrated by obvious information that should have been included in a business profile that was absent when you received it from a broker or a seller. Cheers.
So, how can you learn more about buying, selling, financing, and managing small and medium-sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I've prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.